Yeah, so I talk to investors every single day, and we do have this new Arizona Multifamily Opportunistic Fund. And some of the questions I'm getting are, what are we seeing in the market? Are these distressed properties coming up right now? Can you shed light on those?
Yeah, so the real opportunity that we've identified for the next 1 to 2 years with multifamily is to try to go purchase some really good assets at a discount, because the fundamentals behind owning and operating apartments are still really strong, but there are some owners out there who cannot handle these higher interest rates.
Mm-hmm.
They have not, they don't have deep pockets, and their loans are resetting to this higher amount, so they have to move off of these properties. So we're going to go acquire some of these assets, and as we talked about earlier, there are assets that are trading, people are buying them, and the market is active, but with higher interest rates, you have to be more selective about what assets you go after.
Okay, so are we seeing any deals right now in the market? Have we passed on any? What's some of the criteria for buying these properties?
Yeah, so we have a real specific box that we are looking for, that all of the items in that box need to be met before you buy an asset. Because just remember, buying an asset is like having a child. It's a great thing and it's an exciting thing, but that ends up being a lot of work, and you need to be committed to that asset. You need to be committed to that child. You need to be committed to that asset. So the things that we are looking for are, we're looking for a initially a big discount, 25 to 30% discount off the market value. So that's our first hurdle. If it meets that hurdle, then we're looking at the operations of the property. We want to see if the units there are a good unit mix. If they're all studios and one bedrooms, we don't love that.
Yeah.
We'd rather see some 2 bedrooms, some 2 bathrooms. A better unit mix is preferred. And then we really want to buy assets in locations that are up and coming and are well positioned for the next several years. So we're not buying properties out in tertiary markets. We want to be in these core areas. And you have to remember, you make your money in real estate at the purchase. So that's why we're so disciplined about ensuring that we only buy assets that are at a good price. If we love an asset, but we can't get the price we want, we'll go ahead and wait for the next one.
Can you talk about some of the deals we've passed on?
So we have an active pipeline with our relationship that we have with ABI Multifamily.
Mm-hmm.
They're the largest apartment broker in the Southwest. And the deals that we're looking at are quiet deals. They don't come on the market. They're not on the MLS or LoopNet or some of these areas where typically if you're selling a building, they'll pop up on there.
Yeah.
These are quietly purchased off-market deals, and we're looking at several a week. We have a really strong relationship with the brokers who have relationships with these sellers, and kind of how that works is a seller might say, hey, my broker friend who I bought this building from 10 years ago, 30 years ago, I need to sell this building. I need to move off of it. And most likely in our case, it's over the last few years they bought the building.
Mm-hmm.
And I'll sell it at this amount so that I can just move off of it. In many cases, they're losing some of their equity that they have into it. And that's how these transactions occur. And we have looked at, we were looking at several a week. One example is a building that we really liked in the East Phoenix area, Camelback and 36th Street. It was purchased for about $20 million 2 years ago, and the seller wanted to move off of it. We underwrote it, and we said we would pay about $14 million for it. The seller wanted more around the $16 million range, so we didn't end up moving on that building. But we were close. So we're going to continue to be disciplined, and we think that we're going to be able to find 5 to 10 of these buildings over the next 1 or 2 years. As interest rates stay higher for longer, that window kind of extends, and this will end up being a great opportunity for us.
So when do you expect us to buy our first asset in the fund?
I don't think that's the most important question, because we do have a window that's going to be open for a certain amount of time. We're looking at properties literally every day, every week. But it's more important for us to find the right assets than when we find those right assets. I hope we find something in the next few months that meets our criteria. I think that's very likely. But what drives this is ensuring that it meets everything in our box, because ultimately we want all our investors to have a really good return on this fund. And in order for that to happen, we got to be disciplined about what assets we buy. So we have the capital ready to deploy. We can use that when we find the asset that is right. But it's kind of like, you don't want to marry the first person you date. You want to make sure that you found that right opportunity, and we're seeing many suitors right now. So we're going to continue to look at them, and I think we'll be able to find something in the next few months.
Great. Message there is to go on a lot of dates before you buy.
Yeah, absolutely. It's a long-term commitment.